Where I come from, together with my heart, put them on the plate, so I can throw up the sky, just to pass my side. I hate every single I say, it make you so that it be meaningful. Create something beautiful, powerful, magical, something we can live from. What are you waiting for? Go and let your light shine. You say I don't know which way to go, and I gotta keep going. Just stay. You look up at the side and you leave. You're not in that state. Just stay. Just stay. There. The place like I wanna be. You know what's in the future in front of me. I see the past and I don't look back right here, right now. That's exactly where I want to be. We learn, we grow, we have to fall to rise. Lessons learned the hard way, open up our eyes. Sometimes I laugh, sometimes I cry. I'm trying to swallow my life. And I don't know, but I gotta give it. Don't just stay. You know, stars in your feet, your heart is in your love. Just take me on, just stay. So, there's no way to complete unknown. Oh, no, inside. Oh, like a single never that I should go to sure. What I so that I am was goodbye. I know gonna be so sad. Stay so straight door. You can shift the weather and more. I never give up the fight. I'll be chasing the sun through the dying. Just so it's me right now. Giving myself, losing myself. Don't just like going to the heights. And my soul. Be still. Sad. Sit down. Straight door. So that.
Good morning. Just putting a few final touches on a couple of things, and we'll see how today's session will run. Okay, we'll get started here in just a moment. All right, well, good morning. Happy Friday, everybody. And hope everybody's doing well. Now, let's do a quick little rundown and we'll set up some trade. We'll set up some trades. We have a lot to kind of watch for this morning. Not a lot of economic reports. We do have Fed Chairman speaking, Austin Goolsbee, 9:45. 10 a.m. Consumer sentiment. Since it's a standalone economic report, we might see some volatility around that. Baker Hughes at 1 p.m. and another Fed speaker, 1 p.m. at the same time, and then Treasury statement. What's in the headlines? A lot of things are kind of quiet, suspiciously, especially since all the and I'm referring to media, some of the mainstreams like MarketWatch, Benzinga, FX Street. Um, well, there's several of them out there that I monitor. China News, MarketWatch, yeah, CNBC. A lot of things are fairly quiet. Okay, we do know that potentially Trump was going over to the Middle East, but then when you look at his schedule is says he's got a 3 p.m. doctor's appointment. Okay, let me just bring that up for a moment. There we go. So Friday, We see President at the White House. It's open press at 3 p.m.
Order filled.
This guy's going to be amazing being all over the planet here. Okay. That is if he went over to the Middle East, okay, Oval Office, and then it says who's going to be there. The press pool, open press. First Lady makes an announcement 11 a.m. Yeah, so he has a doctor's appointment, and we'll see what happens, okay? Because there's a lot of talk about what's happening over there in the Middle East, potential peace talks, which could spark some really good things, okay? Let's hope everything works out that way. Index is pushed higher, had made all-time highs this week, but this is the fourth day this week that we're starting off as an inside day. Okay, so what we mean by inside day is when we see that the opening of the session is opening inside the prior day's trading range, we have a little different rule set. Okay. Often, if we're taking breakout trades, they fail quite a bit. Okay, so our first trade we're going to set up today, and I'm going to keep my position size small. Now, looking at the daily chart, and we've been doing some study and watching of the what do you call it? CRT, candle range theory. Okay, and if you look over at the daily chart right down in the corner here, you'll see that yesterday's price action closed inside the daily candle. So a price movement up would satisfy that technique. Okay. So price moving back up inside that range, we'll look to a smaller time frame for either a fair value gap or a zone. Okay. So setting up this trade on the S&P, I have a wide range here. We've got from 798 to 806. Okay. So I'm going to come in at the proximal line, and I realize that I have roughly about 8 points worth of risk. Okay. So I'm going to start off with a couple of micro contracts. If this plays out the way that I anticipate it to, we'll find some supply, and then we'll look to close much lower on the session. Okay. NASDAQ did the same thing. So NASDAQ and S&P from the daily charts are looking, if you've been watching that candle range theory and kind of looking around at it, I do have some more comments on that a little bit later, but let's go ahead and set up some of these trades ahead of time. Now I'm going to keep these all just around 2 micros. If this happens the way I anticipated, I need enough wiggle room to get a very big and strong move. Okay. And I am anticipating a stronger move to the downside. Okay. We have seen the market's been moving up on somewhat moderate but kind of light volume, which is a negative divergence. Okay. Now I'm willing to take the risk with just a small amount. Okay. Now the larger time frame implies that we could get significant price movement down. Now keep in mind you are going against the market structure. Higher time frame trends are still to the upside. And another reason for keeping the position size smaller. Okay. So as I set up the S&P, and we'll just kind of go right through the list. I have several that I want to set up and get us ready for this. Okay. We're going to come in at 67.98, stop loss 68.06. Okay. So we're going to place a sell stop market 67.98. And just using 2 micros. Okay. Once filled, I'll come back in and place the other side of the trade. Okay. Using and understanding what my risk is at 68.06. Next, we're going to have NASDAQ I know I don't have everything organized away. You look up in the upper corner here, daily chart. Notice yesterday's candle closed inside the body of the prior day's expanded range candle. Okay. Now that's a key point when setting up for that candle range theory. Okay, you got the three candle pattern. Okay, and where price had bounced back up. Okay, just hasn't connected with supply on the smaller time frame. Setting this one up, I'm going to keep my trade size small since I'm going against the overall market structure. Counter trend trade. Okay, going to look to use two micro contracts. 25,377. No, it looks like it's miles away, but it's really not. Okay. Once filled, we'll come back in and place a protective stop loss. Okay. We have a little bit less risk on that, but still some risk as price does approach that high. On the Dow, okay, Dow is a little bit easier here. And since the Dow is starting off as an inside day, we're inside the prior session's range. You can see the Globex range inside the prior session's range. Okay. Inside day. Inside day breakout trades often fail. So I'm looking for price to move up into this range and then have a much tighter stop loss. Okay. Some of the zones that I have plotted, I had to go all the way down to a 1 minute chart, 2 minute, 3 minute. It's a much smaller time frame. Okay. Also recognize I have the dead space marked off here where we have price consolidating for a period of time. Okay. Um, Taking trades short inside that dead space is a little more elevated risk. Okay. Now we don't have any economic reports per se early on until about 10 a.m. Eastern. Okay, so we're looking for that short-term little pop up into 46.93. We'll have a stop loss about 731, and we'll keep the contract size pretty small as we start off. Looking for now, we're not taking the breakout to go long. We're actually looking for price to pop up. And notice this strong move down. One of the things with the price patterns is if you have a strong move down and then you start making the base where you have multiple touches of resistance, okay, 3 touches, we often see price break higher just a little bit. And due to that, what happened prior to that, this could potentially lead into a V-shape reversal. Okay. Now, this is just one of the clues that I look for. Strong drop like that. Basing over on the left-hand side. Okay. Little breakout to the upside. And then we look at the potential of this move. This is why I'm willing to take the risk on a lot of, small risk on these trades. Okay. And that's why I'm anticipating markets to move the way that they are. And I'm making reference also to the weekly, daily time frames as price made new highs. And today is the fourth trading day this week that price has been inside or kind of consolidated. And fourth day this week that we've started off as an inside day. Okay. So setting up, I'm going to keep with 2 micros also. We're going to look at right about that 46,700 selling short. Okay. And then I'll place my protective stop loss. We'll come up here about that 47.25. Yeah, there we go. Okay. Very small risk. Okay. But as I've done my pre-market routine and gone through many of the charts and things like that, I'm just looking around to get that solid setup and anticipating a move up and then a stronger move down. Okay. You can also take a look at the Dow on the higher time frame. Okay. Still needs to break the low or break the high on the daily chart to find buy side liquidity or find sell side liquidity up above. Okay. Okay, let's come over to Russell. Hey, Russell as well. We're going to set up the trade on the Russell. Again, with the same mentality, looking for price to pop up and then come back down. Daily chart on the Russell. Looking up, you can see that we're an inside candle. You can see how price has been consolidating for about the last 4 days. And again, today is an inside day. So a little push up into that range, and then we'll look for price to potentially move down. Now, you are going against the market structure. Okay. Our buy side would be looking for these areas below. We'll come back and do a quick little check. So if we get a drop after the open, then we're going to look for some buy side liquidity, but we do need to take out the prior session's low for that buy side. Okay. All right, setting up a trade, keeping it with just 2 micros. Okay. Now you can size your position however you like. Right now I'm probably risking maybe less than $100 on each one of these potential trade entries. Okay. 24.98. And then we got about, I'll just go up, we got 2-point risk. So 24.98, sell short, 2 micros, stop loss, 2,500. Okay. Let's see, 24.98. And stop loss will place once we are filled. All right, pre-market, also looking over at a couple of other things here. We got, let's just kind of keep going with our things when we start off as an inside day on the equity indexes, we have to take a look at a few other things that are out there. Okay. Now, very often when the $10 and the 2-year yield are correlated, it's a more favorable trading environment. Okay. But if you already notice that we're an inside day, okay, and if you notice we're an inside day and then you take a look at the dollar still holding the highs and in a strong price movement up on these hourly charts. And then you look over at the 10-year and the 2-year yield, they're dropping off. Something's not right. The 10-year and the 2-year yield should be very highly correlated with the US dollar when we have favorable trading environment. When that Fitch readings come out, that's what. Those are. And also the Michigan Index set to deteriorate further. Just noticing some headlines coming up. Okay. So the market is, and what I'm making reference to is this has been a tremendous website to get involved with. It's like having a Bloomberg terminal right in your office, okay, without the cost. Okay. Fitch ratings are big market movers. Okay. You never know when they're going to come out. Okay. It's not a scheduled report, but this is like a credit rating on it. The ratings rise in delinquency rate fueled by office defaults in September. Okay. And then we see the Michigan FX Street said they're looking for kind of a lower number for the consumer sentiment. Okay. And then we have some other news that is really just kind of delayed because we don't have actual numbers in place. Okay. Anyways, back to our thought here. Inside day, taking breakout trades are elevated risk. Often the better trades happen a little bit later in the session. Confirmation of that later in the session and waiting for the markets to line up, taking your time on an inside day, is we look at the dollar, the 10 and the 2-year yield. Okay. If they are correlated, then we're a little more aggressive to get into trades. Okay. If they're not correlated and bond yields are going down while the dollar is going up, it does encourage you to wait a little bit longer. Okay. Down in the corner, we see that the pre-market trend, the short-term traders index, also referred to as the ARMS index, developed by Richard Arms. Okay. The trend is very, very low. Okay. Now the trend low, and if the indexes are moving up while the trend is low, often this implies that there's selling going on in that up move. Trend low, time to go. Trend high, time to buy. Okay. So we're looking for that correlation, the trend being low. Right now it's trading about 0.28, okay, in the pre-market. Okay. Volatility index is pretty much flat, okay, with the VIX. Okay, and as we're seeing, yeah, pretty much basically 5 cents. Okay. Now, other things that we need to pay attention to is usually the markets will set people up ahead of time. Okay, the banks and institutions, what were they doing yesterday? And if you look at the tick on the NYSE, you see that they were selling most of the day yesterday. No big buying. Now the tick represents the New York Stock Exchange, not just an index. It's a whole composite. And when we see that there is much more downticks than upticks, pretty much that whole session, we see that the big banks and institutions were selling into the moves or selling yesterday, and we're going to watch and see how they open today. Okay. Now, I made some comments about looking for the market to pull up a little bit and then have a stronger drop. Well, that would make sense if we see where the tick here was pretty much on the sell side. Okay. We also have Columbus Day, where the bond markets will be closed on Monday. I just want to remind everybody, check the announcements in the Discord room. We will be doing a community trading room, kind of more relaxed. Since the bond market's closed, the stocks will be open, futures will be open. Okay, but we're going to have a community room on Monday. Yeah, the VIX is not showing anything, and that's precise. Okay. So when the VIX is not showing anything, thanks for the comment, Robert. When the VIX is not showing anything, okay, and you can get the pre-market data for the VIX, okay, but also watch for when the session opens. If the VIX is trading up over $1 or down over $1, often that is showing us we have some greater volatility and potential really good trade opportunities. Okay. So the VIX not showing anything, okay, as Robert points out, okay, does imply that things will be waiting. Okay. Inside day, we talk about the US dollar, the yields. Okay. We talk about the tick being low. So we're taking information that we saw yesterday and we're bringing it over. Okay. What do we at here? Looks like we just got the Dow. Okay. Let's come back over. Okay, we got short the Dow. I'm going to come back in and I'm placing my protective stop right about that. I'll just go a slight bit above that at basically about 7:30. Oh, there we already got the stop in place. So again, with a couple of micros, we're looking at 25 bucks. Okay, so I'll leave that there. Okay, now the potential is getting the move back down to demand. Okay, taking a quick look back at the S&P, still kind of quiet inside the Globex range. Okay, also on inside days where the market starts to open inside the prior session's range, gaps often fill the same trading day. Okay, so a real perfect scenario would be price comes up here and then we're expecting the gap fill. Okay, but the being prepared that hey, price could come down and fill the gap and then make the move up. Okay, so prepared for either side. On the downside, we don't have any really solid demand zones. Okay. We do have a potential support building up in this range. And our demand is much lower. Okay. Not much in the way. We look over to the left because of all the consolidation. Okay. Look, there's a nice big pocket of points. Big pocket of points. A light volume price move up. Okay, price just started crunching through that. And notice doesn't this look like kind of a topping pattern? Okay. So anyways, there we go. So I'm planning for both sides of a potential trade. If price goes up, I want to sell short. Price goes down, we'll look for a bounce off of support and look for another entry to continue to go find some demand. Okay. And NASDAQ, much like the Dow, or sorry, S&P, okay, kind of quiet. Perfect scenario. Price goes up first, and then we have the sell-off. But we also have the potential if price comes down and we find some buyers, okay? Buyers are located much, much lower where we had that accumulation is where we anticipate there to be some leftover unfilled orders, okay? It's right at the start of that price movement up. All right. So, thanks for that. Oh, yeah, there we go. Ooh. I'm gonna look for, okay, we just got a nice little drop off the crude oil. Crude oil daily chart, as we mentioned, had that death cross. We have a larger time frame area that we're watching for over in this. And we're looking for price to come into demand. Notice what happened though on the last death cross. Big price movement. Okay. So we might be right at the start of that. We can see where we have potential, and I might even bring it right down into that area here. Looking at the leg base, looking for about 54.60. So how do we get into this to play it to the downside and manage our risk? Now let's come back here on our 5-minute chart. Now for this, since the trade is already underway, we can look at using kind of a momentum strategy, which would be using a fair value gap. We're looking for price to come back up. Looks like we have one right down here too. So what I want you to see is there's a very methodic way that we are looking to place trades, manage risk. All of this is based off of looking at our pre-market routine and putting that information together. Okay. And we just had an immediate retest at 59.88. Okay. Market structure has been sideways and now making a lower high on the higher time frame. Lower high followed by lower low. So we're going to look for participating in this. We'll keep our contract size small. Okay. Taking the trade short. I'm going to come in at the market.
Order filled.
And I'm gonna come back here and place my protective stop right about that $60 range. If I'm stopped out, then I'll look for the next level up above, okay? Keeping the contract size small, we got about $34 risk on this trade with the potential of a pretty sizable move, okay? That death cross is something that traders, oh, it's big taboo. Well, it's just a picture on a price chart, but when you go back and look at them, they do have some pretty substantial price moves after that, okay? Net gas, also, yeah, looking at that, just went down and did a liquidity grab on that using a 60-minute chart. We dipped down below. And what we will be looking for on nat gas. Let me get that line over there. Okay. Is we'll be using the technique with the fair value gap as price dropped out of that range, and we'll look for the opportunity to come in. Right now we have the 3-candle pattern. We'll look for an opportunity if price comes back down. 3.165. Placing that order. Start off with one contract. Stop loss will initially go down at 146. And we're good to go on that one. Okay. Gold, good example of how the fair value gap worked. Sorry, I took this one that was set up. Okay. We're looking for gold to move back up into the upper range here. First target about 4,038. Okay. So we're looking for price to come up inside of this range here. Okay. Stop loss on this, I've got 2 micro contracts, and you can see if you catch a good trend, a couple of micro contracts can do fairly well. Okay, so this one is pretty much passed. Okay, we're just watching it play out. Okay. Bringing this over, we've got just a moment before we start the market session open. We got Russell gapping up 64 cents. Okay. This is not a breakaway gap. It's not a runaway gap. It's just it's not an exhaustion gap. Okay. What else do we got? We got Russell. Oh, we got nat gas. Oh, nat gas right off the bat. Fantastic.
Order filled.
Okay, here we go. And let's see, we got gold. We just talked about that. Now, if you have questions about the trades, good morning, Mr. Rowe. If you have questions about the trades, the things I'm looking at, type them in the chat. We have a team that's watching and lets me know each of the questions, and I'm happy to answer those because we're always learning, right? Oh, we got stopped out. I'm going to come back in at 693. If price does start to come down, I want to be part of that. I don't have any other place to go short until price comes up to supply. Okay. So just a little whipsaw action. Russell. Okay, Russell's doing pretty good. And remember, on inside days, taking breakout trades can be a little more elevated risk. Okay. So just to reiterate, we're looking for a short opportunity as price moves up into that range. NASDAQ, also looking for that short opportunity. And S&P. Now, as of this last week or so, I've been doing some study about the ICT, the inner circle trading, okay? We also visited the fair value gaps. We also visited candle range theory. And in summary of all of that, if you look at the zones that we are creating and potential trades, all you have to do is crank this up to a higher time frame and you'll see, so why they're getting the trades. We break this down into smaller time frames to reduce our risk, and we have some different details. But in discovering and watching that play out, it does give us some extra clues because I know other traders are going to be thinking that at the same place. Okay. Looks like crude oil got a little bit higher bounce. Okay. So we'll use this fair value gap, and I'll look to take the trade short up about 60.28. I just lost $32, okay, on 2 micros. I'm not giving up on what I anticipate the markets to do. The market structure is to the downside on the higher time frame. Price coming back up to find fair value or supply. We'll look for the trend to continue. $60.28, selling short. Stop loss would be $60.50. Okay, gold getting a nice move. That gas following through. Nice, again, a nice little fair value gap trade setup. Okay. Fair value gap helps us splice into that move. Okay. After the candle range, the current candle broke below the prior candle, leaving a nice tail, currently. Okay. Now, what we'd like to see is that price closes in 24 minutes, closes this candle above 3.173, and then we'll be off to the races. Exchange traded funds, really kind of a quiet open. Not a lot of strong activity on the indexes. Okay. No distinct gap. And that's what we look for on the exchange traded funds. What type of gap did this have? Okay. Now, the 3 main gaps that we look to trade would be a breakaway gap. Price breaks away from a confirmed downtrend or confirmed uptrend. Okay. A runaway gap is after price consolidates sideways for a period of time. We look for the price to gap, and usually it gaps outside the prior session's range and then just starts running. Okay. Runaway gap. And then we look for exhaustion gaps. Exhaustion gaps happen at the in the direction of the trend. Okay. Go that gas. Okay, and let's come over here. So as we are paying close attention to what the dollar, the 10 and the 2-year yield are doing, okay? Why pay so close attention? Because we have British pound Swiss franc, Aussie dollar, Canadian dollar. We have several products, FX products, that are nearing demand as the dollar is nearing supply. Okay. So they can turn out to be some pretty good trading opportunities. Okay.
Order filled.
We know that these are mostly inverse related. Oh, we just got filled on S&P. Excellent. Okay, let's get our stop loss in place. $68.06. And on this trade, we have about $80 worth of risk. Okay. Now, if you're using some of the other tools, and what's nice about the ones that I mentioned, the candle range theory and ICT training and things like that, is they have a little bit wider stop loss, which has been pretty beneficial. You kind of get a little squeeze when we're getting so precise, but they would put their protective stop loss right up there at the prior session's high, which I'm going to do now, just to give myself a little more wiggle room as the session opens. Okay, so I'm going to come in just a little bit higher, about 68.12. That does increase the risk, but it keeps me potentially in the trade. Now, using those techniques, you could wait till price comes up and then use that candle range theory and use some of those techniques as price starts to turn out of there. Okay, you'd have to drop to a smaller time frame, maybe like a 5-minute chart, and let those candles come into play. Okay. Remember, breakout trades on inside days often fail. This is where I'm being a little more aggressive on participating in that. As price comes down back to the buy territory, we'll look for a first target right about 67.85. Okay. And if this buy territory is going to hold up, that's where we'll look to splice into the trend. Let's take a look at the NASDAQ. Ooh, NASDAQ just missed us by a tick. Oh, look at that. One tick it missed us by. Well, we still got a little bit of time. Okay. Ooh, let's come in here. Let's cancel this one. And I'm going to take a shot at that 46,876. And then we'll use the 934 as our protective stop loss. Russell's quiet. Notice price broke out, retreated back pretty quickly. Okay. That is also a sign, that inside days can be choppy like this. Crude oil making its way up to that supply. That gas still holding out. Gold has not formed a new fair value gap for me to adjust my stop. Okay. All right, we're starting to see a little weakness in the US dollar. In the 10 and the 2-year yield are getting a little bounce on the hourly chart. Okay. Now remember, we started off this session talking about the inside day. We talked about the VIX, not giving us really any signal. The trend was trading low in the pre-market, so there were more downticks and upticks, more down volume than up volume. Okay, trend low, time to go. since the market opened and more stocks trading now with more volume, okay, we're seeing that the trend is now pushing to the upside, but so are the indexes. Okay. Now, when the trend gets above 1.5 up to 2, okay, we want to see the markets dropping for a buying opportunity. Okay. Trend high is time to buy. Trend low is time to go. Okay. So, hey, ABGO, yeah, we're looking to short the S&P. Okay. I gave it just a little more wiggle room. Looking at the high time frame. Okay. So I'm currently short, yes. This is a counter trend trade. Okay. We're going against market structure. But we do have some evidence here on the daily chart using a daily candle that we should be looking for that. Okay. Some of the techniques that I mentioned, the inner circle trading, okay, ICT. I mean, there's some really good techniques. Now, I think they way overcomplicate it with a lot of the acronyms that they use. Okay. I mean, I'm a little confused and it's like trying to interpret a couple different languages. Okay. A lot of acronyms, but you don't necessarily, you do need to understand the acronyms, but you need to see the picture associated with it as well. Okay. I just heard another order filled. What did we get put in? Let's see. We got Japanese yen. We have crude oil triggered. That's what it was. Okay. And we already got our stop loss in place. Now, if our supply zone or the fair value gap holds, looking for price to come back up to fair value, for it to continue lower. Okay, down to the daily zones. Okay. First target is going to be about 59.84, but we're really looking for a big candle, big drop. Okay. The risk is minimal. I have $44 worth of risk on this potential trade, or this, I have this trade. Okay. Now gas, okay, working out really well. Now I want to point out that we're using a couple of different techniques here. Never downplay anybody's way of looking at the market, but try to understand and figure out what it is they're looking at. Okay. When you have many traders
Order fill.
looking at the same thing, get NASDAQ.
Order fill.
Just got hit on the NASDAQ. When you have many traders looking at the same thing, it becomes self-fulfilling. Oh, we just got hit on the Dow. Sweet. Watch the time. We have a first Fed chairman. Oh, no. Yeah, first Fed comes out right now. Okay. Remember our economic reports. Also, we look for price to intersect with supply zones on the quarter hour. Okay. Stop loss is in place up there about 46,934, right at the top of that range. Okay. And now we're looking for price to come back lower. Okay, so we're on that one. Now, market structure is a little bit better in our favor for the Dow, making lower highs, lower lows on the smaller time frames. Okay. We're just looking for a little more commitment. Our demand zone and the potential for the gap fill. We're still in an inside day, and it's a very high probability that the gap fills the same trading day. So that will be our first target range back there about 607, which is, about a couple hundred points lower. Okay. Actually 270 points lower. So a couple of micros could still turn out to be a very decent trade. We have $44 worth of risk. with a potential pretty good size gain. Okay, Russell has triggered. We need to place our protective stop loss. I'm going to come in I'm going to come in right at that 501. And good to go. Crude oil. Oh, that gas is looking pretty decent. Taking some heat on the S&P. Awaiting the remarks from the Fed chairman coming out. All right, let's see how the indexes are performing together. Dow's up. Russell's up. Looks like they're all correlated. Very nice. And let's take a look at this NASDAQ large market cap stocks. They're not blistering up or blistering down. Okay, back positive a little bit. S&P's coming back for us. So we're finding that there are some unfilled orders there. We're just going to see if there's enough to drop down and find demand. Okay, now prior session time, we are looking for prices to come back to the gap fill. That's one of our immediate areas. Okay, that we're looking for that profit potential. And we only got 2 micros and we're not doing too bad for as far as the points. Okay. Dow. Okay, looking for the gap fill inside day. Fed speaking. Come on, S&P, go green. Oh, S&P is green now as well. Russell? Yeah, good job, Russell. Well, wait a minute, this is looking like a pretty decent day. But we crude oil. All right, it's a little green. What did we discover? Well, there were some unfilled orders. Price came back to that fair value gap using that technique. We had an entry. What do we have? About 40 bucks worth of risk, $44. Okay. Large time frame, we are looking for price to come back down to about 59.50. We just bounced off of that. And nat gas. Lots of green on the screen. How you guys doing out there? I don't know. My head's spinning. I'm trying to find too many things, right? Yeah. See, I'm going to get out of this one. Looks like the gold is getting weak. We'll take a small profit. Actually, come on, push back up. Yeah. Let's grab that one.
Order filled.
All right, what else do we have? Let's come back out, check the dollar. So we check the dollar and the yields, nothing's really changed here. Dollar's still flat. The yields have not really moved. Okay, so nothing really jumping around. Okay. So we don't have any setups on our FX markets. We did have a nice fair value gap on platinum. Now, platinum is a pretty little bigger risk on those trades. And, but again, the technique is what you guys should be looking at. One of the things that there's a lot of stuff going on out there with the prop firms and things like that, and getting everybody really excited about markets and trading and the hope of the get rich quick. But there's a lot of lessons to learn. Okay, and that can be a little bit challenging with all those lessons to learn. Okay, because all you're doing is all those traders are doing is looking for the money. But if you look behind what they're actually doing, is that a strategy you can relate to? Is that a technique that fits the way that you like to see things? As I stated before, don't downplay anybody's way of looking at the market. Take time to study it, verify it, understand it. Okay. Use one of those prop firms. Elite Trader Funding is one we work with. Um, and use those prop firms to not risk your money to learn how to trade. Okay. So it looks like our equity indexes are doing just what we planned. That can all change. You've got 7 minutes for the consumer sentiment report. Okay. Yes, Ro, that was on the S&P. The manipulation or the spring on the Richard Wyckoff setup. Ooh, Dow's looks like it's really starting to come our direction. Beautiful. First target, looking for the gap fill. NASDAQ, looking for the gap fill. But we do have kind of a speed bump, 6 minutes. You have to determine, are you going to stay in the trade going through that consumer sentiment, or are you going to get out before the economic report? S&P, looking for the gap fill. Inside day, very often gaps fill the same trading day. Okay. Now, for those watching in the YouTube, we're doing a live stream this morning, so live stream Fridays. Are you guys making any money on these, or are you just kind of getting the idea of what we're doing? Okay, is a lot of this benefiting you? Okay, and you may not be able to take every trade. Okay, you might just say, hey, you know what? I can trade one at a time. I get it. Okay, but are you picking up some information? Are you say, hey, oh wow, I just watched this guy. Took a short on the S&P when it was going straight up. How did he know that zone was there? Okay. Or have any of you taken trades on this? Exactly, Ken. All right, we're 5 minutes away from the economic report coming out. Prices moved away from our zone. It looks like we've got a good 2-to-1, possibly 3-to-1. Are you going to risk your profits right now going into that? Okay. Beautiful trade on the Russell. Crude's taking its time. Okay, that gas still has not built another fair value gap, so we're not adjusting our stop loss yet. We took gold off. We used the fair value gap once. Now it's coming very deep in the zone. Okay. So how do you feel the consumer sentiment numbers can come in? We already had one news story come out there and said, hey, the numbers are not going to look good. Okay. Now, why is that important? Well, it is important because these are last month's numbers. These are September's numbers. How did you feel in September? Just kind of take a measurement of your own behavior. Were you very bullish in the market? You know, were you out there buying everything under the sun in September? Okay. And if you didn't think it was a really good time to be buying a lot of things, and most people were, kind of kind of standing back after they went to all that back to school shopping the month before. So September might have been a little bit more of a bearish in my opinion. Okay. So the numbers being reported in about 2 minutes are going to refer to the prior month. This is why it's important to watch and monitor the uh, what news stories come out when they start talking about the upcoming economic reports. Most of the time, they already have the numbers. Okay. Most of the time, and most of those numbers are produced from surveys. Okay. And they have the potential of being restated. Okay. Hopefully, more of that is changing from the Bureau of Labor and Statistics. Okay. Getting back online. Okay. Can't trust the data, and if we're always readjusting the data, you know, we can depend on it to create some volatility. All right, so the report's about out. Let's come back over S&P. Now I'm going to sit through this. My stops are in place. I could potentially get stopped out, or we could get a pretty sizable move lower. Okay. Let's take a quick look at we got Dow futures or S&P futures are up 19 points. And we have 12 Dow stocks up over 94 cents and one down. That leaves us at 11. So S&P futures and cash are fairly priced at the moment. Okay. Fair value. Market's got a little uptick. That was not a very good reaction. We have taken a little heat, giving back a little bit of the profits. Inside days, we often look for the gap fill the same trading days. So I'm still keeping my sight on that price moving lower to get that gap fill. Let's see if price starts to move lower on the equity indexes. Don't even know what the report is. We just know it was about to happen. Here we go. Check out Russell. All right, first target, gap fill. And there's also a little support right there. Dow, swing. Yeah, come on, gap fill. NASDAQ. That's a tough one to stay in. I mean, each one of these trades are done with 2 micros. Okay, 2 micros. S&P. Okay. So in each one of the equity indexes, we are anticipating the gap fill. I may not jump out there, but that's where we have an initial target. I'm actually looking for a much bigger price move lower. Now we also see Apple and Nvidia. They are still looking pretty bit bullish on a 5-minute chart. We have not made lower highs, lower lows. Okay, so the risk is elevated in here and staying in it. You're going against the market structure. Okay. Little volatility here. Let's see, what else do we have? Yeah, I noticed my data was slowing just a little bit. So turned off the camera there for let things catch up. Nice. Nice little fair value gap entry on crude oil. Now, fair value gap and a lot of these other techniques that are out there, they don't act by themselves. Okay. Our pre-market routine and how we gather information to assess the market conditions, inside day versus outside days. Okay. You need to have a good, solid way that you are going to collect information to understand the trading environment and what we're looking at. Okay. The other techniques out there pretty much get you in the same general area. Okay. But they don't act alone. Okay. Even in trading stocks and always when analyzing stocks, you got to remember 39% of your stock's move is directly correlated to the indexes, S&P, NASDAQ, Russell, Dow. 41% of your stock's move is directly correlated to the sector and industry. Now, if you think about what I just said, 80% of your stock's move had nothing to do with the stock. So when you're doing your funnel approach to make trades in the market, okay, you got to start off with the indexes and the sectors and the industries, and then you have your list of stocks to participate in. We had some stocks I put together for last week. MELI was one that came right off. Now, I want you to kind of observe the whole picture. Okay. What's this picture look like? Notice the dead space right here before price dropped into demand zone. Demand zone identified by finding resistance, a buy territory, whether we make a higher low before the breakout or a lower low, okay, we need the structure inside the buy territory, whereas we can anticipate there to be some leftover orders. We do have some trades coming up. We have ADI. These are charts that I put together over the last week. Okay, I think I did some this Sunday. And the stocks don't move that fast, but you notice that when we go through, it's always pretty much the same picture. Okay, and if we're looking for a short opportunity, of course, you would look for where you have a sell territory up above. Oh, look how fast this one, CSGP coming right down to that. Okay, so whether you're trading stocks, futures, Forex, okay, look at the price patterns. Look what I'm illustrating here. Okay, it's always pretty much the same setup. What do you also notice? Well, if I have a dead space prior to supply, then I'm going to anticipate price going up and selling short up at this level. Okay. Some of the other subtleties that we have going on in here, okay, is whether the demand zone was formed first or the supply zone. Okay. Because you could have them both ways. And we got ON price. Yeah, that one. Yeah, here we go. Good example. Demand zone formed before supply zone. There are other examples. I think we had a good one on the euro where supply zone was formed before demand. Starbucks is getting close also. Okay. All right. Markets are just chopping sideways. They haven't violated our stops. Okay. Now it is perfectly okay because right to take profits anytime that you feel you want to take profits. Okay. Some of us trade just based off of the P&L. Okay. Made 200 bucks, come out. Okay, perfect. Okay. All right, nat gas, we're still do good on that. Crude oil. Okay. Russell. I still have enough cushion in here. And I'm still expecting the gap fill inside day. That's Dow. Got a nice cushion up here. Still expecting the gap fill. NASDAQ, expecting the gap fill. Now, could I come back in and just take one micro off? Sure. Could you close the position and walk away for the day? Absolutely. Okay. What is your purpose for trading? Will determine the type of techniques and the trading style that you like. Okay. So you notice the price is bouncing back up, which is okay. But if you look at the Dow 30 stocks, what's shifted? Now we have, remember, we just had one Dow stock that was negative. Now we have 1, 2, 3, 4 negative over $1, and we have 12 positive over $1. When you net the result, that leaves us with 9. Take that 9, multiply by 2 when you're looking at the S&P compared to the cash market. And you see that, hey, cash and futures are balanced. They're not oversold and they're not overbought at the moment. Okay. But there's been a pretty dramatic change in the number of Dow stocks that now are negative greater than that 94 cents or negative over $1. Okay. As we're looking at S&P for the moment, we got a 20-minute chart up here. Using that candle range theory technique, we had that big expanded candle and price closed inside of it. Okay. That means on the third candle of this structure, when it pops back up, you want to intersect that with some supply. Now that might, when I'm using that 20-minute chart, you might be able to drop down to a 1 minute and kind of see where that picture is. Okay. And on this 1 minute chart, let's get this over here. Price did pop back up and found that fair value gap. Now we've seen that fair value gap to splice into a move that has the candle range pattern that they're looking for. Okay. So this is a bearish type pattern. We can see there was one up here where we had an expanded range candle. Second candle formed or closed inside the prior one. Then we had a nice sell-off. Okay. That's what we're looking for here. Just continued move down. We do have the high potential of filling the gap the same trading day. Okay. Very often, high percentage of the time, when price opens inside the prior session's range, it's a choppy environment. We only enter in a zone entries only. No breakout trades, because breakout trades often fail. You could see that there was a breakout and then price now failing. Okay. So these are things that you study over time. In our live trading room, every on Mondays and Wednesdays, we do cover a lot of this, and also in our community trading room. Now, just a reminder, Monday is Columbus Day. Bond markets are closed. Okay, the stocks and futures will be open. We are switching Monday, Tuesday around. Instead of doing a live trading room, we're going to have a community room. Okay, so everybody's welcome to join it. You can find our the Zoom link on Monday. You can find it in our Discord room. Okay, can you post the Discord link in the YouTube channel? Thank you. Now the market's gotten quiet. Ooh, coming my way. Here we go, S&P, come on. Get us that gap fill. NASDAQ still hanging in there. Looks like Russell's going to get that target first. Now, over time, when you guys are studying and learning the different techniques, you'll see it's not about trading one product, okay? Every product that we looked at and took a trade on today had very specific entry criteria. That information was put together from our pre-market prep to understand the trading environment that we're going into, okay? Using high time frame, market structure, high time frame, candle range, theory, okay? And it's quite interesting. You know, I started going down that rabbit hole trying to figure out the candle range, thinking it was a little better technique. And I realized actually this morning when I was doing it, that's just a fractal of what we see. And it just depends on what level of clarity you want to see on the price chart. Because when we're looking for those two higher time frame candles to confirm, we're looking for price to come back up and test supply. Now, we do know everything works on the small time frame. Sorry, we know, I was going to say, anyways, getting pretty excited about this, but I like a lot of detail in understanding why. And some of those other techniques, we just hit first target on and gap fill for the Russell. Still got Dow to go. In Q, S&P. Okay, so now you have a choice on the Russell. Is price coming into demand area, or is it just testing support? The Russell futures follow the exchange traded fund. The exchange traded fund is still looking to fill that gap. See all the indexes together. Oh yeah. So gap fill, we still got lower. Yep, coming right into this. This is potentially an accumulation area. We have resistance. We have the buy territory, so we might get a little bounce. but we're still expecting the gap fill. Okay. Notice how I drew out the picture. Resistance, step 1. Step 2, the buy territory. Step 3, look at the structure. Find the area. Did we make a higher low than the prior low? Did we find a leg base group of candles? We're seeing there's a couple of buyers there. Okay. Watch the time. Did price arrive into that little zone? Was it along with the market structure? Okay. And more times than not, we're going to still fill that gap. Okay. Now, as much as everybody would like markets to go straight down and do it in just a minute every time, sometimes it takes time to play these out. Okay. Candle range theory is pointed out pretty nicely on these daily charts. No reason to get out. Hey, candlestick, let's see. I think it depends on the prop firm used. Some of them use trading drawdown, trailing drawdown. Yeah, they do use end of day, but they have a max drawdown for intraday trading as well. So if you exceed that, then they will lock it up. There's a lot of them out there right now. Look at the readings and their payouts and also what it costs to get involved with them. How's our crude oil doing? Oh, dang it. It came down and found some buyers left down at the bottom. Okay. Yeah, Top Step's a pretty good one. They've got some good, the Top Step TV is pretty good too. Keeps you entertained. Now, they don't teach you a lot. They just kind of show you what they're doing and a lot of chit chat back and forth. Okay. I like to include while we're watching trades play out is information about those, about what's going on. How did I arrive at that? Okay, Russell achieved target 1. And we're looking next level, target 2. And then, of course, if we get that big drawdown, then we're looking for target 3 much lower. Okay. Now that you have a sizable cushion, you could move your stops to break even. You could take one contract off. Remember, your trade management rules are based off of your trade plan. Okay. Keep in mind, notice how Russell went sideways through all of that. Okay. If price starts going back up through that area, it could move pretty swiftly through it. Okay. These are all filled orders. Okay. And you can see how swiftly it moved down through it. It also could move back up through it. I mean, it's just another piece of the understanding where that dead space is at. 3 touches on top, 3 touches on bottom. Okay. Okay, we mentioned a couple other things today about our fundamentals in the market, or internals, I call them. And what we're looking for. Oh, this is a signal. Okay, there could be some buying coming in. The trend is high. Markets are dropping. Okay. We did see some buying come in as we saw the market go up. Now we're going to see if the down ticks start to outweigh the upticks. It's gotten really quiet right now. We're kind of in that trade range. But if the tick starts showing more downticks than upticks, we're going to see a little more push to the downside, get those gaps filled. Advancing issues over declining issues are back in the no trade zone. Okay. And while price is in that no trade zone, would mean just simply means we have about equal number of advancing issues over declining issues. When we get to extremes, we're looking for the price or trends to change. Okay. All right, nat gas got a little pullback. Stop is still in place. Crude oil got a little bounce off that fair value gap. You could either take a profit at those. Okay. It's your choice. Russell? Dow. All right, how many have you guys made a trade or two today? Anybody make catch some of these moves? How much money did you make? I stuck with 2 micros on each one of those just for demonstration purposes. Good question, Ken. Ken is asking, is there a time difference between trend and the market reaction? Yes. When the trend hits those extremes, above 2 or below 60, okay? And we also want to look for that intraday when it closes above 1.5. You can look for approximately, I would say about a 20-minute delay right around that range. Not exactly 20 minutes, but plus or minus a few minutes on either side of that. And the trend really measures the stocks on the New York Stock Exchange, okay? And we often see that futures get to extreme highs or lows or in the demand or supply about 20 minutes after we see the trend peak out or close above 1.5 or close above 2 or close below 60. Now there are both negative and positive divergence on there. When the trend is high, we want the markets to be going straight down. Okay. What that would imply is if the trend is high, there's more upticks and up volume coming into the market. Basically, they're putting the brakes on the market. Okay. So trend high, time to buy. And if the trend is low, below 60, we're anticipating the markets to be going straight up. Okay. And if the markets are going up, there's more sell volume and there's more down ticks than up ticks, that would imply that they're selling into that price moving up. Okay, so the trend is often interpreted the wrong way. I mean, when you read it and understand supply and demand, and go out to investopedia.com, they will just simply say, when the trend is high, the markets are descending. Well, people can take that as an opportunity to keep going short. Okay. Oh, we still have, yes, potentially the gap will fill the same trading day. Okay. If you become a student of watching how big was the gap up on the S&P this morning, and you start documenting, okay, how big was the gap up? How much time did it take to fill the gap? Now, back in the day, we used to say, well, if the S&P futures gap up 2 or 3 points, we'd expect the gap fill to happen immediately, okay, after the open. And if the S&P gapped up more than X amount of points, it's changed a little bit over the years. Okay, I'd expect the gap to fill before 11 a.m. Eastern. And if it gapped up outside the prior day's trading range and a certain number, then I wouldn't expect the gap to fill till the end of the trading day or not at all that day. So to add to, I demonstrated today looking at the inside day, okay, and gaps often fill the same trading day, okay, about 85 to 90% of the time. If price has not traded above the prior session's high or low inside day, okay. If price gaps up or down outside the prior day's trading range, but opens inside, it often fills, but it's not as high a percentage. It's probably about 65, 70% of the time. Okay. If price gaps up or down outside the prior session's range, often those gaps do not fill the same trading day, but a little bit later. Okay. If you add to a little more detail, well, how many points did the S&P gap up this morning from prior session's close to the 9:30 open? Then you will be able to say, okay, well, yeah, S&P gapped up 10 points. And I've noticed every time it gaps up 10 points, or I've many times, let's say 8 out of 10 times when it gaps up 10 points, it often fills that gap in X amount of minutes. Okay. These are things that you look for and look for the details. And then you start fine tuning some of those details so that you can incorporate it into your trade plan. Now, this is ongoing. This is why we start off with the pre-market routine. The pre-market routine course that you can find in our website, if you get that and you start doing the collecting of the data, and by the way, you will not trust the data unless you document it yourself. You won't trust the data unless you incorporate it into your trading plan. Now, you don't have to do everything at once. You can start off with one and just verify it. Okay. Well, let's just say, oh, inside day, yeah, gaps fill very often, but how often? Okay. But that's going to take time for you to document it. It'll take time. What you're witnessing today, especially like with the Russell, is we did see that the gap filled. We see that we're still inside the prior session's range. The Russell gapped up 94, gapped up about 10 points and filled the gap within the first 30, probably within the first hour. Okay. But the more detail you get and the more times that you watch this happen, okay, you'll start to gain trust in it and reliability in it. Okay. So fine tune your way of looking at the market, fine tune information. Why do I mark the prior session's high and low? Why do I mark the Globex high and low? Prior session's close. Okay. All of these are part of a pre-market routine, part of a ongoing routine so that I can document this over and over and over again to where I feel good about risking money on it. Okay. No different than driving a vehicle. Okay. You notice certain patterns and certain behavior with other vehicles, it causes you to speed up or slow down. Okay. Or pull over. At any rate, we have completed our live trading room, a live stream today. Did you guys like it? Did you learn a few things? We saw a lot of profitable trades. All right, I'm going to head over to the Discord room. In our Discord room, just let me bring this up. For those watching in the YouTube channel, you can scroll down to the bottom. We will be in the active income trading. It's basically you can, if you're in there, you can have a voice. I'm available to answer questions. Okay. There's an announcement from the team talking about Columbus Day. No live trading room. We'll see you in our community room. Okay. And the link will be shared here in the Discord. Okay. So I also want to point out for those that are still trading stocks, oh my gosh, Matt has been firing off, doing an amazing job, and he's using the techniques, and he's just absolutely been amazing. Everything that was that all of his pictures, his setups, support, sell territory, price coming back up into a supply zone. Okay, beautiful trades. So take time and look over Matt's trades. Okay, if you like trading stocks, we're here to teach more of a technique rather than say, hey, this only works on futures or this works better on Forex and so on. Okay, it's a picture on the price chart. Everybody makes a trade based on the picture. Okay, at any rate, I hope you had a wonderful day and you guys have a good weekend. We look forward to seeing you next week, or we'll see you on Monday if you want to join us for our community room where everybody has mic privileges and everybody can share their screen. Okay. Have a great day, everybody, and I appreciate everybody for being here. Bye now.